What's up, money lovers? The streaming wars are back after we covered Netflix a few weeks ago after it got absolutely walloped down quite a bit. We're going to be looking at Warner Media today under their new CEO, David Zaslav. So Zaslav is a workaholic, it would appear. Zaslav likes to begin his workday at 6 a.m. He likes to host 7 a.m. meetings. People probably hate working for the guy, but it sounds like he gets things done. Creative executives are going to now be reporting directly to him, which is a welcome change and a more hands-on approach, it would appear, to a business. Kind of got off to a lackluster start with the launch of HBO Max under AT&T. Perhaps things were a little too relaxed and it didn't perform as well as had been hoped. So financial discipline has been a career-long staple of Mr. Zaslav, and he will need it in order to rein in the $55 billion of debt that this newly merged Warner Discover Media company has as a result of the deal and the acquisition of cable channels. So they have CNN, TNT, HBO, Food Network, and HGTV. He's promised to cut at least $3 billion in costs right off the bat here. He said we're not trying to win the direct-to-consumer spending war, which Netflix has taken a lot of flack for, over concerns with its long-term sustainability, and especially as of late, now that there is a lot of competition, is this a race to the bottom? People are starting to wonder. HBO Max has had strong growth with 77 million global subscribers across the globe, up 13 million from a year ago. Now, the company plans to eliminate expensive scripted programming in favor of cheaper unscripted reality shows, so the collective IQ of the population will dip another few points. Warner Bros. Discovery decided not to renew TV deals to broadcast the Screen Actors Guild Awards in another cost-saving measure. They've carried that show for more than 2 decades, but let's be real, does anybody actually watch that? Referring to the swift rise and fall of CNN+, Zaslav, he's pretty ruthless, stated, "We will clearly take swift and decisive action on certain items," as you saw on CNN+, didn't really last too long. He's meeting with J.K. Rowling, looking to make fresh Harry Potter content for HBO Max. And he also wants to use more statistics and data, big data guy, to understand what's working and what's not. And clearly looking at CNN+, he's not afraid to cut what isn't working. So this financial discipline is going to be much needed with the huge debt pile this company has. He's got a history of financial discipline. He won't hesitate to cut staff for unprofitable operations. And his CEO pay package rings in at a whopping $246 million for 2021, making him one of the highest compensated CEOs. Apparently he likes to throw sick ragers at his home in the Hamptons as well. He's got close ties with Oprah Winfrey and Steven Spielberg, which could bode well, so maybe we'll see some content. He's a workaholic and is arranging to make the Starbucks on the Warner Bros. Lot open 24/7. So I think this company is in pretty good hands here. Expect him to continue to rein in costs and cut projects that he considers costly and unnecessary, like we just saw with CNN+. So Mr. Z was CEO of Discovery and was hesitant to take the company into the streaming wars as he didn't think they had quite enough content to make it worthwhile yet. AT&T came along looking to offload Warner Media, aka their HBO Max division, as just the latest failed acquisition for AT&T in a long string of failed acquisitions. So Discovery pounced on the deal, and here we are. So let's take a look at the streaming layout, or streaming wars, if you will. It's not been pretty, not been too pretty. The current standings, we still have Netflix king, number 1 here at 221 million subscribers. Disney catching up in second place with 137 million subscribers, although they do also have Hulu they own, which has another 41 million subs. So we could say Disney probably has almost 180 million subscribers. So HBO comes in third here with 77 million subscribers. And then if we combine that with Discovery, so they're up to 100 million between HBO Max and Discovery Plus. So third place in the streaming wars. So Warner Bros. Discovery Incorporated, ticker WBD, since the merger was completed, is down 31%. That's since the beginning of April. Not a hot start, but that's the whole market. So there's definitely a lot of debt with this company. And for that reason, and also, just the streaming arena is very complex and crowded, I think, at this point. So I'm not investing in this company right now. But under the leadership of Mr. Z here, I think that this company is in good hands, and it will definitely flourish more so than it did under AT&T, that's for sure. I mean, AT&T was a joke of a rollout. So Warner Bros. Discovery is definitely interesting. They're going to have a ton of content and definitely have a lot more coming with the franchises that they own. I think that there's a lot they can do, but We'll have to see how this plays out. Let me know what you guys think. Are you buying Warner Bros. Discovery? Why not? Let me know in the comments below. The latest entrant in a very crowded streaming war industry.